All right, let me begin with a very special, joyous, happy weekend to everyone out there. Doug here with Trade with Doug, and I welcome you to another edition, the weekly edition of Stock Market Mutterings, where my promise and guarantee has always been to take a grope in the murkiness, trying to make some sense out of the stock market. And I hope by the time it's all said and done, I have made you a little bit of money, or at least provided you with some clarity. Before I begin, don't forget, as always, Technical Talk, noon Eastern Time, every Tuesday with Sylvia Bellrock. It's down there in the description box. Feel free to click on the link. Bring your cryptos, bring your stocks, bring your thoughts, bring anything to the table. We're there to answer all your questions, and we'll stay as long as we have to. It's a live feed right here on YouTube. Also, if you need help with your personal trading, take a moment, visit tradewithdoug.com for all of your free educational needs and other type of educational needs. So let's get started, because the real question is here, man. I know many of you got started in trading not too long ago, and it's just been straight up. It's been a straight up rocket ship. So much rocket ship, all you've seen is rocket emojis, YOLOs, diamond hands everywhere you go. Well, sometimes that doesn't work. So many of you might be experiencing a pullback for the first time. Congratulations. Or some of you might be watching your portfolio melt away. No congratulations there. And you might want to know, when is this going to stop? Well, we're going to try to talk about that here in just a second. I have the weekly chart up here on the S&P, but let me pull up the daily and we can start from, let's say, first to worst. Now, this is definitely the biggest sell-off I think we've seen since Corona. And on Friday, the S&P, I've got the futures up here. I'm just going to call it S&P, SPY, whatever. This is the first time it's closed under the 200-day moving average since coronavirus. So it's been a really, really long time. And where we sit now, we have one level left. I'm going to get my pen here. I wasn't prepared. I deeply apologize here. We're going to go through this technicals with you guys. Let me just scoot my pen tool over here. Bear with me for one minute. We got one little spot left right here that looks like where this market wants to test, which is 4,300. That's going to bring us from the lows. I know you can't see the date down here, but this is September. I'm trying to write the word September. I deeply apologize. September of 2021. So that's going to take us back to where we are there. That's the next level of support. Now, maybe the market will panic bounce and reconnect with the 200-day moving average, but it needs a lot of work at this point for it to reverse. This is a deep sell-off where we have, I think, the last 7 trading sessions, only one has been green. And still to this day, from this pullback, this has gone on really since the year started. Since this pullback, we really haven't had that deep panic yet, where everybody's just kind of completely capitulated. And maybe it comes to that, I don't know. So what I would watch first here Monday is if we are going to connect with this 4,300s, 4,271 areas that take us back to September. And this is a pretty good area, excuse me. This is a pretty good area right here because it once was a double bottom. So pay attention to that going forward. That's important. Now, I put a few numbers on here for your reference. If this is about, don't quote me to the perfect penny here, but I think this is about 8.5 to 9% correction. I'm sorry if I don't know the exact number. If we go to, let's say, a standard 20% correction, that's going to take us all the way back to where we were, let's say, a year ago. So again, if you think about this pullback, yes, it's big. Yes, it could be devastating, but we still haven't reached bear market territory, and it kind of puts it into perspective on just how far we've gone up. And if you take a look at the Qs, the NASDAQ, you're going to see a much different situation right there. Let me pull it up here real quick for you guys. We're already about 13% here of a correction. So just 20% takes us back to where we were last May. So this market was up a lot, both the tech sector, the NASDAQ, and the Dow and the S&P, up 27% last year. Not every year can be a green year. And this is something I mentioned that since Thanksgiving, we saw the growth stocks. Now, if I can kind of sidetrack for a quick second, the market always leaves clues. It seems like when these reversals happen, they come out of nowhere and they always catch people off guard. But there's always some sort of sign out there that tells us that this is a possibility. Now in hindsight, because I kind of mentioned this before, maybe I didn't play it perfectly as a trader as well, but here's something I want to mention. You go back to the summer and you start looking at the growth stocks. I'm going to mention some off the top of my name. We had things like Twilio, Trade Desk, TTD, NVIDIA, Netflix missing earnings. Well, that one held up. Let me strike Netflix out of that one and Nvidia as well. But you look at things like Lulu, Deckers. You had a lot of growth stocks, Shopify, Spot, Squarespace, tons of those growth stocks. They were already trading way, way lower during the summer. They already went through a bear market correction. PayPal, some of these we were talking about in November and December in these market mutterings as potential reversal trades. Some of them have now been under the 200-day moving average for months, and they continue to accelerate downwards. Again, another one, Peloton, for example, one that I was once very, very bullish on. I've done videos on that in the past. So growth stocks already hit the eject button during the summer and the early fall of last year. It was really only 5 to 6 names in the tech sector that really floated the entire market, most notably Microsoft, Apple, Google, Nvidia, AMD. Those stocks really held the market, and now they're finally coming under the pressure. So going forward here with the NASDAQ, you're right at your nearest bouncing zone, which is 14,350 area. Pay attention to this. So as we begin Monday, we're very, very close to some significant support levels. But 20% on this one is 13,418. And if we reach a 30% correction, it's 11,726. This is still keeping us within the parameters of 2020. So again, it may seem like the market always has to bounce, but it doesn't have to. And the higher that it goes, the worse the drop can be. And at this point, because the market's been so inflated and so overbought for so long, a simple 20% correction, which is standard every 5 or 6 years in the markets anyway, could be pretty devastating in its size. Yes, at some point this will bounce, but you need to look for some signals. You just can't haphazardly buy into this. So on that note, I'm not looking at any regular bigger board stocks at the moment to buy. If I make any trades, I'm just sticking with the indices, picking my shots, using my stops, and just kind of working my way through it. As I say, this too shall pass. Now I have a couple of cheapies here I'm going to put on the list for you guys to watch, both long and short. I want to talk about this Dave right here. Well, let me first admit that I've shorted this thing a couple of times with some success, but it hasn't been an easy short. And if I've learned something from shorting stocks over all of my years, is usually the toughest shorts turn out to be longs. This already broke the highs of its IPO right here, which is about $9, $9.50. I wouldn't run right into this thing first thing Monday morning. I'd give it a chance to settle. But if it can kind of just, let's say, print a pretty good day early Monday morning, hold some strength. Let me pull up a smaller chart because I'm not going to give you good analysis this way. If you can get some pullback into this zone, 850, like it just kind of works its way down slowly in here, holds through the first 30 to 40 minutes out of the session, and then starts to curl up, I think this is a chance for a nice long, pressing through 10, and who knows where this little guy can go. To show you what that is, it's done that 2 days in a row. You had a little pullback, just something like this early in the morning. I've got a 5-minute chart, by the way. Pulls back nicely into a support from the previous day. A little standard check mark system, right? The check mark pattern, down and then up. Just something to hold itself, then curls back up and grinds out the rest of the day. Does that same thing Friday, pulls quickly early in the morning, holds, and then starts to just really accelerate as the day goes on. Whatever you do not, and I mean do not, chase the breakouts. Maybe you get away with that once or twice, but in the end, that's going to be a terrible strategy and it develops poor habits with you. Other than that, I think any sort of movement is only going to be a few days because I don't expect this thing to just turn into the next greatest stock we've ever seen. It's most likely a short, but right now, these things, regardless of their fundamentals, their backing, or whatever's going on, they can go a lot higher. So I think if you do get a press through 10, you're going to catch another wave of momentum that probably takes you towards 15. So keep Dave on the list. Don't chase it early in the morning. Wait for a pullback. See if it holds early. Same thing could be said for this PIK. P-I-K. Another stubborn one here. There were a couple of decent short opportunities, but the same thing with this thing. It's being very, very stubborn with that. And right now, when you look at this daily chart, it isn't too bad, right? I mean, it's not too bad looking as far as a great, let's not say great, that's a dumb word. Ascending wedge. Let's go with the standard technical analysis of ascending wedge. You can see the resistance right here, guys. 756, 750s, let's say. Same thing I would recommend with Dave. If you get a pullback in the morning, holds above 7, kind of pushes back up, you get a nice break of the 750 or a close above 750, you should at least get to 850, which is the highs from, this is December. And then you got this 1050 high that could come into play if this thing really gets going. So keep this one here. Dave and PIK, not too bad for short-term longs. And when I say short-term, 3, 4, 5 days or something like that. We're not falling in love with this thing. We're just trading it. Now, there's a couple over here that were longs that I do believe that look like shorts. I'm going to put BTCS here on the list. I feel that now the short, a lot of meat's been stripped from the bone. You have a very nice tall wick here, rejection at 8. A failed rally 2 days later, gets very close to 8 and rejects again. The real entry here should have been 7 for a swing. But sometimes you do miss those entries, and here's how we deal with that. What do we do next? I would look for a break of this low. You're right here into support, roughly at 494. So what you would like to see is, I wouldn't short this if your first move was just blowing right through it Monday. If that happens, just scratch it off your list. To me, that's a chase, and you're running out of room, because I think even the low lows on this, it probably just goes back to where this run started. So that's like 350. So you're giving up too much already. What would be nice would be another bounce up into this 5 area, followed by rejection, then a short. We could tight stop it right here and then get this move through the lows and possibly down in here to 3. Needs a little work. So what am I looking for on this one? I need a bounce. I don't want to chase anything through the lows, because even pieces of garbage will bounce and get radical sometimes. So that's the deal with this one, BTCS. And how about the crowded short of the month club, Lucid? Not too bad. Not too bad here. Again, I think the first short entry was right around the 41s to 42s on this break. Here's really nice resistance, roughly at 43s. It's now moved a little ways from that. So when I look at this, I say 41s, 42s should have been the entry. Now you're at 37.75. So I would do the same thing I mentioned with BTCS. So my formula, which I can only share with you, I'm not saying it's the only way to do something, but I just want to share it with you for some of those that might come in handy. I don't want to chase shorts. Probably the worst thing you can do is chase shorts. It's worse chasing a short than it is chasing a long, because more people are inclined to long and chase. So there is sometimes in bull markets some luck involved. But it always seems that when you short down in the hole, you may have heard that phrase before, shorting in the hole, it seems to always snap back on you. These things are really resilient sometimes when it comes to support. So I'd like to see here the same thing you saw back here a few days ago, a bounce. Just any sort of bounce and rejection that gets you closer to 40. Now, maybe you don't get that opportunity. Maybe you just keep blowing through that and dumping. And if that's the case, it's just one of those situations where you've missed. You don't want to get down in here, because this is what can happen. Even in this case right here where it's sold off, you had this flush day, but by the time it was over, it bounced $5-6. So you don't want to get caught down in there and get squeezed on, because this thing could, in fact, pull back up here and go to 55, then come back down again, and you don't want to ride through that. That's going to murder your account. So let's look for maybe a little bounce, rejection off of 40, tight stop between 40s and 42s, and maybe we can get down into this low pivot right here from the 6th, which is 33. Whatever you do, no chasing. So guys, in a quick review, when the market sells off like this, you don't have to be the first one to the table. Just because it's bounced in the past, if you've randomly bought it, doesn't mean it has to bounce here. The market does correct 20 to 30% every 3 to 5 years. So that's just part of a regular, normal cycle. So many of you that came in, I'm not knocking you, but maybe all you've ever experienced is linear bull markets and rapid responses to corrections. It hasn't always been that way. So you could get into this year, if you think about it, 13, 14 straight years of green with the NASDAQ and S&P. I mean, we're kind of due for a negative year. It doesn't have to be a bloodbath year, but just a standard negative year or a choppy year or just not a double-digit gaining kind of year could change the way you have taught yourself to trade, so keep that in mind. It also means that this can go much lower than you think it can. And right now, as it stands, We don't have any signals that tell us now's the time to go back in, that now the selling is over. Now that could change Monday, Tuesday, or Wednesday, maybe after the Fed, I don't know, but we don't have that right now, so keep that in mind. Other than that, guys, I want to thank you for watching this video. Take care, trade well. Leave your comments down in the comment section, and I will talk to you soon. Cheers.